Hi guys, it is Sarah Reagan. I know it says Lisa, but it is Sarah Reagan. I wanted to jump on here and do a video to show you guys how to do an estimated closing sheet. We're going to go over finance and cash because we are seeing more cash nowadays. So first you need to log into Paragon and make sure you have either Google Sheets or Excel. Excel's the easiest that I found. But just for the sake of this, um, I'm going to be using Google Sheets on this computer. So if you want, you can follow along, open up your computer if you want. Um, and so we shall begin. So you'll log into Paragon. If you don't have access to Paragon, that's okay. You can just save it, or this video will be saved for later. So we're going to click on Paragon MLS. And we are going to come right up here. So you see your home screen. Up here is MLS documents. We're going to click on that. And then we're going to come right here to estimated closing statement. It says it's got two files. I've been using this one down here at the bottom. But you can really use either one of them. So we're going to open this up. And so, like I said, I'm using Google Sheets just because it's easier on this computer. But it does, I have Excel on my other computer. So, all right, so you're going to see a whole lot of things going on. It automatically autofills with the purchase price of 100,000 earnest money. So you're going to conventional 4.5%. You're going to see that. And it'll automatically populate the date of today, whatever day you're doing it, it'll auto-populate that. And it'll go 30 days out for a closing day. So we're just going to use my name as an example. And then the address we're going to use is 123. Actually, we'll use one of my listings. We'll just do 15 Belmont Drive. Municipality right here is Decatur, or the city, whatever one you're doing. It's going to be the city. So Decatur, Alabama. This is going to be 35601. Oh, that gun. 35601. $1,000 earnest money. We'll just leave that. We're going to do, so you can see right here that there is no mortgage insurance or VA guarantee fee or anything like that with a conventional. But with a conventional, we're going to say the purchase price is $225,000. Just for the sake of this, $225,000. So we're going to say they're doing a conventional loan with 3% down, which is $6,750. So they're going to put $6,750 down. They're going to put $6,750 down. The earnest money is going to be $1,000. We're going to leave that there. We're going to leave a closing date of 30 days for a conventional. Their interest rate's probably not going to be as high as 4.5%. So we're going to say 3.5%. Okay, so you can see it changed their monthly payment. Let's see. Down payment, there is no mortgage insurance or anything like that on here. So the next thing we're going to see is the brokerage fee. It automatically populates at 6%. So it'll give you that right there. 6% of 225 is 13.5. Document prep fee, I just leave that alone. That's average. They give you averages already. Tax proration is right here. So we're closing in August, according to this. So we're gonna do the tax proration, the month is gonna be from October 1st of the previous year. So we're gonna count November, December, January, February, March, April, May, June, July, August. That's 10 months. So we're gonna put a 10 right here. And then this right here is going to be the monthly tax rate. So we're actually going to click back on Paragon and we're going to open up the taxes. We're going to click on Morgan County because this is Decatur. Click on real property, the property address. So we're going to do 15 Belmont. You don't have to put drive or street or anything like that when you're searching in the tax websites. It usually brings up no records, and you'll see right there it'll say 0 records found. But if you try to put in street or circle or anything like that, so just put in the street name but not the ending part of it. So here's this, and we're going to click on this, and on Morgan County your total tax is going to be, well, this is, oh, well, she's over 65, so she's actually exempt. So this is a really bad example. So let's see if we can find another one. It'll usually tell you what it was, but okay, well, we can't find that. So we're gonna go to a different example. Sorry about that, guys. We'll do, just for the sake of it, we'll say taxes are $1,100 a year. So we'll do 1,100 divided by 12 is going to be 91.67. So we're going to click back on this and we're going to put 91.67, maybe 91.67. All right, so you see that number changed right there. These are the prorated taxes that the seller will have to pay because taxes are paid in arrears. Title insurance plus binder fee is $870 based on the contract price. So it halves. Each side pays a half. Wood infestation report is, they put $125. If you know what company you're going to use, you can change that to the price you know it's going to be. Tax service fee, normally I just leave that because it's average. Underwriter and processing fees, these are pretty much average. If you have a client that's going to use Keller Mortgage, you can put a 0 in both of those. The express mail, leave that. Lender's reinspection fee, appraisal fee, normally just leave all that. Title search fee, the attorney's fee, if you use a specific attorney or if your client uses a specific attorney and you know the cost that they charge already, you can go ahead and change that. But for now, we're going to leave it as an average. Credit report, lender's doc prep fee, survey, they aren't typically required here. But yeah, and then it says it may not be required by lender. If you're buying a ton of land or a ton of acreage, it might be. Flood certification fee, that's just making sure that it's, doesn't require flood insurance. The loan origination fee. Now the loan origination fee, in case you don't know, and it'll tell you out here, is 1% of the loan amount, not the purchase price, but the loan amount. So if you go right up here, you can actually see the loan amount right here is $218,250. 1% of that is $2182.50, and they just round up to $2183. So that, again, if you're using Keller Mortgage, that would be a 0. So off the bat, right away, you're saving over $3,000 in closing costs so far, if you use Keller Mortgage. Deed, mortgage recording fees, state tax and stamps. If there's an HOA, there's usually like a $75 or $100 transfer fee. So I'd typically just use that there. Now, If you are working with the buyer or the seller and the buyer is asking the seller to pay any closing costs, let's say that they're asking them to pay $6,000 towards their closing costs. If you look, it says buyer and seller in these columns right here. On the seller side, we're just going to type in 6,000. It will automatically put $6,000 in parentheses as a credit to the buyer. You can see, if you noticed before, this said $6,317. Now it's just $317 because they have that $6,000 credit. First year hazard insurance. This is, average based on the sales price and, things like that. First year flood insurance, unless you know that it needs flood insurance, just leave it. Interest. This is based on an average interest rate per day. Then you have your monthly. This is your escrows. So this is the first year of hazard insurance up front. And then this is the escrow account. So they usually do 3 months of hazard insurance, 3 months of property taxes. And then this would be the PMI. PMI is the monthly. So they charge a monthly. If you pay less than 20% down, you will have private mortgage insurance, which is right here. It usually goes off, I think the average is like 11 years or something like that. But yeah, this would be 2 months of the private mortgage insurance right here. So your total estimated closing costs, prepaids, and escrows is right here. It would be $8,864, but we did ask the seller for that $6,000 credit. So now it's $2,864. And if we come down here, we've got the sales price, the closing and prepaids, which is right here, the cost of acquisition, that it's including the closing costs, less amount finance, so there's your loan amount, your total cash due, including your down payment, closing costs, is $9,614. Then you have that $1,000 earnest money credit. So that's actually going to come off of this. So your buyer would have to bring $8,614. This is estimated. Please stress that. This is just estimated based on the numbers that we have right now. We will not have final numbers until about 3 days before closing. So use this sparingly. Don't use it as concrete. Don't tell them this is the exact amount you will have to bring towards closing. It is not. So don't do that. It also gives them an estimate of their monthly payment with principal and interest, homeowners insurance, taxes, the private mortgage insurance. There was no flood insurance involved, so that's a zero. So their estimated total payment is $1,335.17. Now, if you are working with the seller will get the contract price of $225. Their closing costs and prepaids, including the $6,000 that they're paying towards the buyer's closing costs, is $21,002. Estimated gross before payoffs is $203. Let's say they owe $157,000 on their first mortgage. So now their estimated net would be, get my calculator out, would be $46,998. So their estimated net is $46,998 is their estimated of the check that they will get at closing. So that is how you do that. Now, to get it to dotloop, it's different with Excel. So you'll just have to remember, save it as a PDF, not an Excel worksheet. So with Google Sheets, like I said, it's a little bit different, but we're going to go right here to File. Oh, and now it's not going to let me. Why? So we're going to save as a Google Sheet. Okay. So it looks like now we're on Google Sheets. We're going to go to File and Download. I'm going to download it as a PDF document. And at 100%, you can see it breaks it up a lot. So I think I do this one at like 55%. No. You need the signatures at the bottom. Oh, it's on landscape. That's why. My goodness. Yeah, 55% is what I normally save this one at. All right, so you can see it's got the signature places at the bottom. And then the other sheets are just kind of extra. Okay, well, it didn't. Oh, goodness. Sorry, guys. It just erased everything that I just did. Anyways, save it as a PDF, and I'll actually go to my Dotloop and kind of show you how I do this once it's saved. Now, when you go to Dotloop, because you do have to have a signature, so I just click Add Document and Browse, and I pull up my forms, and you can see the ECS right here. I normally name it like the price that I'm doing it for, and then ECS. And then when you open it, it's going to look something like this. And we have the signature places right here. You're going to go to Add Signature, and then you're going to assign it to your buyers or sellers, whoever's in your loop. And if there's two, you're just going to add a second signature right below it. And then again, you're going to assign it to the other person in the party. Keller Williams Madison and your name need to be on this side. But yeah, so that's how you do that. And then you would just save and share to your people. They would sign it. So that's how you do that. Now we are going to go back here, and we're going to scroll down to the bottom down here. You can see it says estimated closing right here, and it says cash sale right here. So we're going to click on cash sale. We're going to do a cash one. You're not going to see loan origination fee, and actually you will for some reason, but it's going to be blank because there's not a loan. So you're going to put their name and their address. City is automatically Huntsville. Closing date again is 30 days. We're going to do a purchase price of $100,000. Earnest money $2,500. So due at closing would be $97,500 in cash here. That's not including the closing costs. So again, we're closing in August, so this is going to be 10 months, and we'll just pretend that that's the tax amount that we're using. Title insurance, again, that's half between the parties. Doc prep fees, usually paid by the seller. Tax proration, again, is paid by the seller. The express mail payoff of the first mortgage is going to be right there. Appraisal fee, we don't typically have an appraisal in cash, but if there is one, that amount is there. The title search fee, the attorney's fees, you can kind of see it's a whole lot lower than the finance one was, because with cash, there's not quite as much paperwork and prep fee and time put in on the project. Deed mortgage recording fees, state tax stamps, all that's pretty much averaged out, so we're just going to leave that. You can see that the closing costs are a whole lot less as well on cash, because you don't have the, the lender fees, the mortgage process or the loan origination fee, the processing fees, underwriting fees. You don't have those. So the closing costs are a whole lot less. On a cash deal, purchasers typically pay their own closing costs, but it's just up to your buyer if you want to ask the seller to pay those closing costs or not. They are a lot less. So, but here we go. We have the $100,000 sales price, the closing costs right here. The cost of the acquisition is $102,448. The earnest money credit was $2,500. So they need to bring $99,948 to the closing table. And then over here on the seller side, contract sales price, the closings and prepaids, which includes the real estate commission up here at the top, the 6% right here, plus their half of the title insurance, binder fees, all that kind of stuff, and the prorated taxes. Again, it has your first year hazard insurance here, which will typically be a little bit more. First year flood insurance, they automatically put that, but it doesn't do anything here. So you can just leave it or change it. It doesn't matter. The estimated gross before payoffs is right here. Let's just say they owe $50,000. So that changes their net right here to $43,164. Again, these are estimated. This right here, it says total estimated closing and prepaids. And even on the financed one right here, it says total estimated closing prepaids and escrow deposits, which is fine when you're doing a, like on the finance sales contract, if you're asking the seller to pay $6,000 in closing costs, you want to put seller to pay up to $6,000 towards purchasers' total settlement charges, not just closing costs. Or you can type out closing costs, prepaids, and escrow costs, like towards the purchasers' closing costs, prepaids, and escrow deposits. Or you can just put total settlement charges to save time. If you put total settlement charges, that's everything. So that is that. And again, save it, put it in Dotloop, add the signature down here at the bottom, have them sign it. You have to do one of these for every price on paper. So please make sure that you're doing the estimated closing cost statements and uploading those with your documents into Command. All right, guys, have a great day. I will talk to you again soon.